Welcome to the Pay Agency podcast session, where we bring you thought leaders and experts to share their insights and experiences on various topics. Today, we have the pleasure of having Tushar with us, the founder of Kansaltancy Ventures. Tushar is a highly regarded entrepreneur, and his achievements speak for themselves. He has been awarded the Best Startup Supporter at the IndiaFirst Tech Startup Conclave 2022 by the All India Council for Robotics and Automation, an accolade that highlights his dedication to supporting startups and growth stage companies across diverse tech and non-tech sectors. It's a privilege to have Tushar with us today, and we're excited to hear his perspective on digitizing money and how technology is revolutionizing the payment industry.
I feel it's a very important topic because two reasons. One, that we have been seeing globalization since the last almost 30 years, and the rise of China has coincided with this globalization. And specifically within India, since 2014, there has been an explosion in the use of digital money, specifically by gateways like the UPI. And hence, the whole theme around digital money has become very important.
Yeah. So to start with, as per your opinion, can you explain what is digital money and how does that work?
Digital money or digital currency refers to any means of payment that exists in a purely electronic form. And digital money is not physically tangible like a dollar bill or a coin. It is accounted for and transferred using online systems. There are broadly three types of digital money. One is cryptocurrencies. Second is the central digital currencies like China has and India has. And third is stable coins. So they are the type of digital currency that allows people to make payments directly to each other through an online system. Cryptocurrencies, they are not regulated by any government body, and they are simply they don't have any intrinsic value. They are simply worth what people are willing to pay for them in the market. So they are traded over a decentralized exchange, crypto exchange. And stable coins are basically cryptocurrencies which are tied to the value of a fiat currency like the US dollar or the Japanese yen or the euro. And because their value goes side by side with the currencies which are fiat currencies like the dollar, so that is why they are more stable and the value does not increase. The volatility is not so much. That is why they are called stable coins.
Yeah, very interesting, and that was very nicely explained. So my second question is, how does digitalizing money impact the traditional banking system?
Well, just look at, if you were to go abroad, you will need a bank to buy dollars or buy a foreign currency. If you were to get your child admitted in a college abroad, you will need to go to the bank, make the transfer of the currency. And specifically in emerging markets like India, where dollar is very much prized upon because our imports are more and exports are less. So that is why the country does not want to lose dollars. So that is why dollars coming inside India is easier. Dollar going outside India is tougher. That's how the rules are set by the Reserve Bank of India. So in this kind of a scenario, if suppose you were to say, I'm a rich guy, I want to buy a house in Dubai, and you were to transact the money using the traditional channel, which is the banking system and the international banks and the settlement banks like HSBC and so on, it will cost you a bomb. So the point is that it will be difficult to transact, it will take your time, and secondly, it will cost you quite a lot. So from there, traditional banking has been disrupted and we saw digital money. So this is essentially money which is stored in wallets and it can be transferred cross-border. So you can transfer the so-called digital money from one wallet to another, no matter in which country you are. So there are two benefits. One is the ease of transfer of the money, by a single click or two-factor authentication. And the second is it costs much less to transact that kind of money. And uh, traditional banking has seen increased competition because of digital money. Consumer behavior has changed with the ease and convenience of digital transactions. For the banks, new opportunities and challenges have been coming up. In fact, you will be surprised. There was a fintech company in Germany which bought a bank. So banks are essentially now being valued only for their license, and whatever they have, the infrastructure and the assets, they are practically of no value because technology is taking over their business. And the other part is that there is improved efficiency and reduced costs. And don't forget, there is increased financial inclusion. So even people who were unbanked, uh, they are able to transact using these simple decentralized finance platforms. And basically, if you know about the Jan Dhan accounts, so almost 35 crore Indians opened zero balance bank accounts in the government banks in the last 7-8 years. So you can imagine the kind of power they have now. Earlier, they used to go to the village guy who used to transfer the government doles to them, subsidies to them. Now the money comes directly into their bank account using Aadhaar. It's called direct benefit transfer. So you can imagine the kind of efficiency in the system which is building up using technology, using digital money. There is greater accessibility and convenience. And today's world runs on data, and whosoever has the data, he is able to offer better services and pinpointed services. So there is greater data collection and analysis of that data, and then use of artificial intelligence and machine learning to crunch that data, make sense of that data, and offer targeted services and products to people. Lastly, regulation and security concerns are there because being decentralized, these institutions operate largely outside the ambit of the local governments, and hence there have been challenges on that account as well, which are, there have been scams and other things. But the way forward is increasing efficiency and all-round improvement in the traditional way banking is done.
Okay, this would actually help our audience to make a clear picture, and it was really informative. Also, could you please throw some light on the potential risk and challenges of digitalizing the money?
See, imagine if there is your enemy country, right? And they're sitting next door to you. They want to send money to terrorists sitting in India who they sponsor. They just open a crypto wallet. The terrorist sitting in your country opens a crypto wallet. They transfer cryptos, and the terrorist uses that crypto, gives that crypto to someone and takes cash and uses that cash for terrorism. Secondly, you know that the kind of scams which happened between 2009 to 2013, 20 lakh crore worth of loans were given to people by the public sector banks, and out of that 13 lakh crore money didn't come back. So basically they were essentially, the level of fraud was, it was totally mind-boggling. Imagine if you have to launder that money outside of India, how easy it is, because you have the crypto wallets, you have cross-border. So money laundering, terrorism, all these things are big potential risks and challenges. So, and secondly, look at the FTX saga. Sam Bankman-Fried, he was using public money which was there on the crypto exchange. He owned FTX, and using that money to do a large number of things, which if a bank tries to do, they will be caught.
Okay.
So this is outside the ambit of the laws. So because it is outside the ambit and the money involved is in billions,
Hmm.
so there has been a rise in scams. Money gets stolen from wallets,
Hmm.
money get crypto money gets stolen from during the transfer,
Hmm.
and look at the SBLC fraud, the world's largest um, uh, Swift, not SBLC, Swift fraud which
Hmm.
happened in Punjab National Bank, Nirav Modi,
Hmm.
$1.3 billion.
Okay.
So, but that was traditional banking fraud. So, what I'm telling you that the rise in scams are there, then there are privacy concerns
Hmm.
that central bank digital currencies will
Hmm.
be accumulating a lot of sensitive payment and user data,
Hmm.
and then data breach is there, data is stolen in the dark web, some employee takes the data and puts it on the dark web, he sells it for like one penny a user.
Hmm.
And technology risks and obsolescence is there, technology is improving all the time. So you put up an infrastructure today, and within 6 months you say this infrastructure is obsolete. So
Hmm.
what about the cost of it? What about the interoperability? What
Hmm.
about the return which was expected on that system? And lastly, because of the regulatory security concerns, regulatory concerns,
Hmm.
there is a substantial cost involved to
Hmm.
launch a digital currency,
Hmm.
and that is being borne by the investors or the government.
Hmm. It's a like very informative information we are getting from you, sir. And so, based on your perspective, will physical money become obsolete when the rise of digital currency
For a
happens?
country like, for a country like India, which operates on two levels,
Hmm.
the middle and the rich class of India, they compete with the English-speaking countries like America and Europe and UK, and so they are there with the best.
Hmm.
And then there is a second India, which is Bharat, which competes with sub-Saharan Africa in
Hmm.
terms of poverty indicators,
Hmm.
nutrition indicators.
Hmm.
So for a country like India, physical money will never be obsolete, at least not in the short term.
Hmm.
I'll give you an example.
Hmm.
Before demonetization, there
Hmm.
was 17 trillion
Hmm.
rupees
Hmm.
worth of currency with the public,
Okay.
and now it is around 31 trillion.
Oh.
So demonetization happened, money went to banks, Paytm grew like anything, fintech platforms grew like anything.
Hmm.
Still the currency with the public has now increased
Hmm.
because because we are the most populous country on the planet, and we have a huge number of poor people who
Hmm.
like to use currency. They can feel it, they can feel the currency.
Yeah.
And secondly, that currency is also stacked by scrupulous people, so they need the black money to keep with them.
Hmm.
And although Reserve Bank has done some fabulous job, they
Hmm.
launched 2000 rupee note to take the 1000 rupee note out of circulation, and
Hmm.
now they have taken the 2000 rupee note also out of circulation.
Hmm.
So this is so that people don't hoard the 2000 rupee note. But
Yeah.
still, look at UPI. When United Payment Interface was launched,
Hmm.
uh, I remember I saw Mr. Chidambaram, the previous finance minister,
Hmm.
saying in the parliament, I mean, can you even think of putting a digital payment system in a country like India? And today, UPI has uh, transacts,
Hmm.
how much is it? 12 lakh crore worth of transactions happen through UPI, which
Yeah.
is twice as much as China.
Yeah.
And UPI came,
Hmm.
and Paytm used to be the leader. It did not catch the wind. It kept on operating its wallet as a priority.
Hmm.
Suddenly, PhonePe and Google Pay came and took over the market.
Hmm.
So now PhonePe and Google Pay are valued at more than $10 billion.
Okay.
So what I'm trying to tell you is that
Hmm.
physical money will not become obsolete. It will exist side by side.
Hmm.
And but digital money will take off as it has already taken off. India is the leader in digital transactions.
Hmm.
And don't forget these unbanked, not many unbanked people are there, but
Hmm.
these below the poverty line people, they don't have access to digital technology. They have feature phones, they don't have smartphones.
Hmm.
So, as an investor, I'm working with a couple of companies which have come out with banking transactions using SMS without using the internet.
Hmm.
And that has been validated at the Reserve Bank of India
Hmm.
launch. So RBI has gave them the, that they asked them to validate, and it got validated.
Hmm.
So, those things are coming, and then physical money, as I told you, people treat it as a tangible asset, like they can feel it,
Hmm.
and also physical cash is anonymous. So you gave your money to someone, there is no record. But if you are operating a cryptocurrency transfer, it operates on a blockchain, and blockchain basically means all the previous data right since inception will
Hmm.
be stored and
Hmm.
can be accessed anytime.
Yeah.
So who gave that digital money to whom since the time it was started,
Hmm.
the records will be there.
Hmm.
So and last that physical cash will keep on serving the unbanked populations.
Hmm.
So on that account, I feel that physical money will exist side by side with digital currency.
Yeah. So, great. I just have one last question for you. How do you see the future of digital money evolving in next 5 to 10 years?
Well, the most significant development will be the integration of digital money into traditional financial systems. So China has been a big opposition to cryptocurrency
Hmm.
for the right reasons,
Hmm.
because the right to print a currency
Hmm.
lies with the central bank of each government.
Hmm.
And if so-called cryptocurrency, which does not have any intrinsic value,
Hmm.
gets built up, then the power of the governments go away to monitor and regulate the sector.
Hmm.
So I feel that more and more, like China launched its digital yuan, and now India has launched the e-rupee.
Hmm.
So similarly, banks will become more of fintech companies.
Hmm.
The digital money of the governments
Hmm.
will be utilized more. The
Hmm.
cross-border transaction will become even more seamless using the government digital monies,
Hmm.
and the cost of cross-border transactions will come down.
Hmm.
And as I told you, banks are being bought nowadays just for their license.
Hmm.
So all the uh, all the branches they have and the whole costly infrastructure, that all will not be valued.
Hmm.
And lastly, the development of blockchain technology
Hmm.
will keep on going ahead, although there is a problem with blockchain that because the ledger keeps an account of all the past transactions, so the transaction becomes slow.
Hmm.
So that is a problem.
Hmm.
uh, but I feel that decentralized finance will keep on growing,
Hmm.
and also there will be greater use of artificial intelligence and machine learning.
Hmm.
The integration of AI and ML in digital money can improve the fraud detection, risk management,
Hmm.
and customer service,
Hmm.
while also making transactions faster and more convenient.
Hmm.
There'll be growing competition. The digital space is likely to see increased competition with new players entering the market and existing players improving their offerings. And there will be greater accessibility and convenience with the continued growth of mobile technology and internet.
Hmm.
Digital money is likely to become even more accessible and convenient.
Hmm.
There will be increased regulation.
Hmm.
The government uh, has seen the frauds, the scams, the money laundering, the terrorism, use of these
Hmm.
platforms for terrorism. So there will be increased regulation, and already the winds are coming from the US on this. And lastly, there will be greater environmental sustainability because you are using less paper, so it is good for the environment. It's kind of a ESG criteria on which a lot of funding will happen: environmental, social, corporate governance. And that way, this technology, there will be thinner wallets, and cardless payments. We are seeing you can make payments in India now with a single click, and you can use your Apple iPhone to just put it in front of a machine and the money gets deducted. So it is cardless.
Yeah.
And credit relevance will be more because the whole record of this person, when did he transact. You will have all the data with you, so you can offer them credit, you can offer them debt, you can offer them a whole number of insurance products, mutual funds. And micro personalization will be there because of artificial intelligence. And all these things will be there. So we at Consultancy Ventures, we are pretty excited about the fintech space and the digital regulation space. And anyone who wants to reach out to me can do on my LinkedIn, Tushar Kansal, that's my name. And also check our website, Consultancy Ventures, consultancy.com. And I'm reachable. You can reach out to me. The links are all there on the website. And this is the way things are going.
Yeah, so it was really nice to talk to you. So that's all for today's podcast, sir. So we enjoyed a lot talking to you, and I hope you also enjoyed a lot talking to us. And being a founder of Consultancy Venture and also awarded by Best Startup Supporter at India's First Tech Startup Conclave 2022 by All India Council for Robotics and Automation, as you have been supporting startups, all the diverse tech and non-tech sectors. So doing all of this and coming to our podcast just to enlighten us, this was been very nice to talk with you, sir.
Thank you so much. I really enjoyed. I was amongst the speakers at the first launch of Peomatics event, Raise Money. And now with Pay Agency, I see a lot of potential, and my best wishes are always there that it goes a long way. And also, I love one of the management principles of the company, that there are more women than men. And as a father to a daughter and a husband to a service, a wife who's a career professional, I'm really happy about that as well. So my best wishes are always there to you, Rasya, and to Pay Agency and all the people out there. Thank you so much for having me.
Thank you, sir.
And I want to repeat, anybody wanting to reach out can check out consultancy.com and can reach out to me through LinkedIn as well. Thank you.